All right. The topic is simple interest and compound interest. First of all, let's try to understand what is interest. Okay. So for this, I will take two characters, lender and borrower. Lender is a person who will give money. Borrower will use this money maybe for his business, or maybe he wants to build a house, or maybe for educational purpose. He will use this money. And after a certain period of time, he's going to return back this money to the lender. Now, what is the advantage that the lender is getting out of this? The advantage that the lender is going to get is when the borrower is returning this money to the lender, he is going to pay extra money to him. And that is the advantage that the lender is getting. This extra money is called as interest. What is this extra money called as? Interest. Okay, and this entire chapter is about this interest. Okay, now interest is of two types: simple interest and compound interest. Okay, and in this chapter, you will see these terminologies: principal, interest, time period, rate of interest, and amount. So let's understand the meaning of these terminologies. Okay, so what is principal? Principal is the money borrowed by the borrower. Okay, and it is denoted by P. Interest is the extra money paid by the borrower. It is denoted by I. Whatever extra money that the borrower is paying is called as interest. Time period. The time after which the money is returned is called as time period. So it is usually denoted as T or N. Rate of interest. The rate at which the interest is calculated. It is denoted as R percentage. And finally, the amount. The amount is the total money paid by the borrower. Okay. So when I say the amount is the total money paid by the borrower, can I say that A is equal to P plus I? Yeah. P is principal, the money borrowed by the borrower. I is the extra money paid by the borrower. So this plus this is the amount. Yes or no? Yeah. And another thing that you should know is when I say rate of interest, the rate of interest is the rate at which the interest is calculated. So that means interest is equal to R percent of P. And in percentages chapter, when I say of, it actually means multiplication, right? So can I say that I is equal to R by 100 into P? So two formulas here. One is that amount is equal to principal plus interest is one formula. And second formula is that interest is equal to R percentage of P, or R by 100 into P. So let's go back to the diagram that we have seen. The lender is giving the money to the borrower and borrower is paying back that money. So let's map these terminologies to this diagram. So what is this money here? This money is P. This is N. The time period is denoted as N. The money and extra money that is paying back combined is amount, and amount is equal to, this is principal and this is interest. Amount is equal to principal plus interest. And how is this interest calculated? Interest is equal to R percentage of P. Interest is equal to R percentage of P. Okay, so two things are very clear for us. One, how to calculate the interest. Interest is calculated as R percentage of P. And second thing is that amount is equal to principal plus interest. What I said is that this interest is of two types: We have simple interest and we have compound interest. Okay, so let's see what is simple interest and what is compound interest. We'll see simple interest first. So simple interest is a method for calculating interest only on the original amount of money borrowed. Okay, so in this method, what we do is we calculate the interest on the original amount of the money borrowed. Okay, so let's see how this is calculated. Okay, simple interest. For this, what I'll do is I'll take an example and I will explain you. So let's say the principal or the money that is borrowed is 100 rupees. It is borrowed for, let's say, 3 years, and the rate of interest is 10%. Okay, so the principal amount that is taken is 100. Number of years, if I'm taking 100 rupees, it has to be returned back after 3 years. And the rate of interest is 10%. So let's see how much money I have to pay back, okay, to the lender. So for this, I'll take a table like this: P N R I I A. I'll draw a small table here. Okay, and you must be thinking that I wrote I two times. So basically, this is the interest for a particular year. Is interest for a particular or specific year, and this is the combined interest. Okay, this is a combined interest. Okay. Now, so let's talk about each year. So the principal amount is 100 rupees. Let's talk about the first year. The rate of interest is 10. So what is the interest for that particular year? What did I tell you? Interest is equal to R percent of P, which is R by 100 into P. So how much is that? 10 by 100 into 100. So how much is the interest? 10 rupees. This is the first year. So definitely that interest for that particular year and the combined interest will be same. So 10 rupees. And what's the amount? Amount is principal plus interest. So 100 rupees plus the interest, which is 110 rupees is the amount. So if I took the amount 100 rupees at a rate of interest 10%, and I'm returning back after 1 year, then I will return 110 rupees to the lender. Let's see second year. 100 rupees of principal. We are talking about second year. The rate of interest is 10%. So how much I have to pay for that particular year? 10% of P, which is 10 rupees. For that particular year, I need to pay 10 rupees. So what is the combined interest so far? So previous year interest and this year interest combined is 20 rupees. And what is the amount? Amount is principal plus interest. So 120 rupees. Make sense? So instead of saying it as I can put SI, simple interest. We're talking about simple interest, SI. Okay. Next, let's talk about third year. Again, rate of interest is how much? 10%. What's the interest for that particular year? Interest for that particular year is R percent of P. So 10% of 100 is how much? 10 rupees. And what is the combined interest so far? 10 first year, 10 second year, 10 third year. So what is the combined rate of interest? 30 rupees. And what is the amount? Amount is always P plus I. Principal is how much? 100 rupees. What is the interest? 30 rupees. So 130 rupees. So you don't have to, make this table every time, but for your understanding, I've drawn this table. Okay. So what is our observation? Your observation is, if you observe here, can I say that generally the interest is R percent of P, but when we are talking about combined interest or the interest that I have to pay back to the borrower, right? Is it not the number of years into R percent of P? If you observe it carefully, first year it is 1 into R percent of P. Second year it is 2 into R percent of P, which is 20. Third year it is 3 into R percent of P, which is 30. Okay, so can I say simple interest is formula is N into R percentage of P? So if I want to rewrite it properly, can I say the formula is P into N into R, which is PNR by 100? This is the formula for simple interest. The formula for simple interest is P into N into R by 100. Another observation, I mean, that's the formula. So whenever if anybody is asking you to calculate simple interest, you'll use this formula. And that's the amount that you will, that's the extra amount, or that's the interest that you're going to pay back. So in this case, if this is the scenario I'm given and I'm asked, okay, how much interest I need to pay, then I'll say, okay, the interest that I need to pay is equal to P into N into R by 100. How much is that? 30 rupees. Okay, I'll not draw this entire table. I'll use this formula directly. Just 30 rupees I'll get. The same thing I'm getting here also. Yeah. Another thing that you need to observe here is that the simple interest here, and whenever I'm saying simple interest, it usually means combined interest. Okay, combined we are talking about. We are not talking about a particular year interest. A particular year interest is R percentage of P. Unless it is specified particular year, you're always talking about the combined year simple interest. Okay. So if you observe here simple interest, okay, is it not in arithmetic progression? First year it was 10 rupees, then second year it was 20, then third year it was 30. And also you see that the amount is also in simple interest. First year it was 110, second year it is 120, third it was what 130. Yeah. So remember that the simple interest and the amounts in the simple interest concept will be in arithmetic progression. Okay. Let's take a question. The question is that an amount of 12,500 was invested at a simple interest rate of 12% per annum. So this must be the principal. This is the rate. If the total interest received is 3,000, calculate the number of years for which the money was invested. Okay, so he has given you the principal, he has given you the rate, he has given you the interest. He's asking you to find the, and he has said very clearly that this is simple interest. He's asking you to calculate the number of years. So what I'll do, I'll use the formula PNR by 100, right? So how much is the interest that I got? 3,000. Principal is 12,500. Number of years is what I need to find out, and the rate of interest is 12. So 3 will go 1,000 times. 3 will go 4 times. These two zeros will get cancelled. So 1,000 is equal to 25 into 4 is how much? 500 into n. So n is equal to what? 2 years. So number of years is 2 years.